Hi everyone. So today is Tuesday, the 28th of April. We are 2 hours and 15 or 2 hours and 14 minutes till US session opens. I'm here looking at the S&P 500, going to try and get an understanding of direction today and this week. And we're just going to softly try and understand the sentiment, what the market's looking for, what the participant behavior is, and then we'll try and make an assessment. But I think, that looking at this intuitively, I think it's going to be a difficult one to call, and I'll go through those reasons in a moment. I'm actually doing this in real time, by the way, so you can see how I think. None of this is scripted. I come across a lot of trading channels out there where it's all scripted, and you can't be authentic with that because the markets is about developing an opinion. That opinion is going to be right or wrong. It's that it's 50-50 on that, but you have to then try and do the analysis to get the edge, right? And it's all about that edge. That's why you are in the market. You're never going to call it right 100% of the time, but you can certainly do some analysis to get that edge. So I like to just record my thinking in real time. I do this for myself, but also as the community develops, we'll get an understanding of what you guys are really looking to achieve from this channel as well. So one of the first things I look at is the leader, and the Nasdaq is this is the Nasdaq here at the top. So the Nasdaq is a leading indicator in the sense that the S&P generally, and I'll use the word hesitantly, it generally kind of follows the Nasdaq like almost like a toddler follows the parent, right? It kind of goes off on its own sometimes, but then comes back and kind of navigates towards Nasdaq to try and stay remotely aligned to the direction. Okay, I'll use that word carefully as well because it doesn't mean that these changes in the day are going to close to be equal. They don't just necessarily have a zero gap between them. So, for example, the Nasdaq future is down 0.96% right now on the futures market. That doesn't necessarily mean that the ES or S&P is going to now chase it and also fall down to that kind of level. But one of the key indicators is that that gap usually closes. So it might be that the Nasdaq comes back up and this goes down a little, but that relationship is quite tight. And now we can see that the Nasdaq is leading that negative sentiment. But what leads the Nasdaq's negative sentiment? What is a strong indicator for the Nasdaq? And that is, sorry, my interactive brokers has just reset itself today, so I have to type in these tickers again. Sorry, is what is it? DJU SSC, the semiconductor. Yeah, here we go. So semiconductors is a good place to look. All right, that's not open, of course, we're pre-market, but semiconductors generally kind of stays ahead and gives the direction for Nasdaq, which gives the direction for ES. That's a very crass, crude way of saying to generate sentiment. But anyway, that's what I do. The next thing we have to do is look at the news, and the news is saying, what's the news saying? Let's get that up here. Geopolitics obviously leading sentiment at the moment. We're expecting Trump now. It's been some time to say something that's going to probably create that volatility again and start driving markets down. In terms of announcements due today, I know something's out in Japan, but I'm not really too concerned about that just yet. What's happening in USA? USA, nothing interesting. We've got consumer confidence. This is big. This is a leading announcement. This is a leading indicator. So I will take this quite seriously. Let's see what it's saying. So US confidence is basically exactly what it says on the tin here, that it assesses spending confidence in the United States in terms of they would interview, I believe it's about 3,000 households to assess how they're spending, what their behaviors look like, and then they generate metrics off the back of that to determine behavior patterns in the economy. Okay, so March was saying that confidence, so it was actually above the forecast. And so that trend usually carries on once or twice before it comes back. So yeah, we've had 3 red ones, 2 green ones. Yeah, we might be due. We might hit forecast. We might be, if we beat the forecast, right? If this comes out green today, the market is likely to rally, because what that says is that that there is still confidence out there in the market. But that's only one small component. It's very important to understand that there are many participants in this market. You've got the hedge funds, you've got asset managers, you've got the dealers, the market makers rather, and then you've got retail investors. Okay, so they all come together and they're all kind of dancing together in this marketplace. So this is just one factor we're looking at to say that, okay, if it comes out positive, it may have a more bullish effect in the marketplace, but it looks like it's likely to come out negative. Another reason this may come out negative actually is because if you think about when the war started and how long it takes for oil to travel through that region and to finally reach the western shores, that takes 6 weeks plus. So those all oil supplies have been blocked for several weeks, and now we need to see is that impact coming through now. Although this won't tell us that, but that is a factor to keep in mind. Okay, that may circle back because the reason I say that because I'm not from America. I don't know if stock levels and shelf levels are full, and you've got all your necessities. I don't know what that looks like there, but if shelves are going a bit bare now and the comments are coming hot, we haven't got the inventory because of XYZ reason. If that's happening now, then this is almost certainly a negative result, and that's going to have a bearish effect on the market. So the answer is I don't know, but let's wait and see what that looks like. Another thing I look at, this is a dashboard I've created myself. I was just mentioned it, that we look at the participation of hedge funds, asset managers, just to see what their behaviors look like. But the reason that hedge funds are actually quite important, let me just, sorry, where were we on the ES? Let me just get that number. We are at 7175 on the ES. And so I'll just get my dashboard back. So 7175. So what we're saying is, now look, this is an important number. What we're saying is that the hedge funds out there have been building up these short positions, right? And this is a considerable number, by the way. So that they are, when they build these short positions, they have to borrow. When they borrow, they have to finance that borrowing, and that's usually done by prime brokers. So just think big lenders. They have their ways of structuring the finance and structuring the deals. The point of this is that there's stress, margin stress. When when the shorts go against them, they're going to get called on margin, right? And it applies to retail traders as it applies to hedge funds. And a lot of hedge funds go bust, by the way. They're not immune to this. They do go bust. But we could see, look, when those positions started building up. So, isn't it interesting? Since that sort of March 17th video that I put together where I had that negative sentiment, the hedge funds also are likely to have shared that sentiment that the market is going down and we have that negative view. So if you look at this, what this is saying is hedge funds margin stress has increased, margin stress has increased, margin stress is now at a peak 93%. The prime brokers aren't going to let this go to 100%, or if they do, then they're going to start getting calls. So we can see that this stress is high. They're going to start short covering, or they already have started that. So what does that mean? That's actually a bullish signal, because as soon as they start short covering, that means buying. Buying means prices going up. So there is that threat of short covering going on, but we don't know, because this is actually heavily delayed data. We don't know. I've only modeled this to try and get it up to scratch, to try and cover a gap in CFTC reporting. But anyway, so we'll park that. So over here we have this thing about how much of their shorts have they covered. It looks like at the current price, they have covered about 67,000 contracts out of the amount that was reported, which is about 413,000 contracts. So the covering seems very minimal at this stage. But again, they report again today, and then we find out what's going on there. The other thing we have to look at is the so over here we also have an indicator. So in fact, let's try and go through this. We also have dealers in the market as well, right? Now, the dealers are these guys here in the orange. Actually, I'm going to pull up another chart on this. Where are you? Just give me a minute on this. I just want to find the gamma exposures that the dealers are engaged in right now. Here we go. Let's leave it at that. Let's get the chart back up. Um, all right, so my interactive brokers has frozen. This is useless. Right, I'm going to pause this video, restart it, and get those charts back up. Just give me one moment, please. Okay, everyone, so that took about 10, 15 minutes. Everything just crashed. It's horrible when that happens. But anyway, we could still see that negative sentiments here. Nothing's really changed since I got cut off. But what was I going to speak about? Yeah, hedge fund. No, we've done that, right? So I'm going to look at options markets, yeah, how the option market is going to try and reinforce our thinking or just give us some kind of sentiment. So over here, I look at something called gamma exposure. I'm not going to explain what that is in detail, but I guess the summary here is that in the options market, dealers dealers are not directionally motivated in any instrument, really. They are there to just provide liquidity. Now, when they sell you options, they are essentially selling you, they're going short in the market, which means that you are going long. If you're buying an option, forget whether it's a put or a call. If you're buying options, you're long, the dealer's short. And because they are not directionally motivated, what happens is that they have to start hedging in the market. So when the price here, the SPX starts to come up to here to 7200, 7200 is where they've got a concentration of exposure. In other words, they've sold a lot at that level. They have to start hedging in the market. So when the SPX comes up to this kind of level, they're going to be selling quite a lot into the market to not to push the price back down, although that may be the effect that happens. The market starts bouncing back down off that, but that's not their intention. Their intention is to hedge in their portfolio so they don't have exposure. As I said, in that crude manner, they don't really care where the price goes after that, but they have to make sure that their books are neutral. And as a result of that, we will see the price likely bounce off this level. So 7200 on the S&P is a key level. Remember, we add those 30 points from the fair value premium to try and understand what the future markets will look like. So that gives us a level of 7230 at the top. 7230 on the top, and then we have 6800. This is a level where dealers need to start buying in the market, and then the likely impact is that it starts to have a positive move. Oh goodness, I haven't explained this now. But anyway, okay, we'll I don't. The point is, I don't think we're coming to 6800 and things are going to start moving up. I think something else is going to happen. But anyway, this is a crucial level. Let's stick with 7200, 7230, and we'll look at that and just see that whether or not that maps out nicely. So I've got here 7230 marked out. Let's just take that down a bit. 7230. So this is really the top wall I see. You can see volumes thin. Today, as soon as the price starts hitting that kind of level, if it does, we should see activity start to kind of chop that up and push it down. We're going to see margin calls for the hedge funds. We're going to see a lot of downward activity. We may have that bearish sentiment in the news. So after this, I really think we are now at the top of that peak. We are at that, hopefully at the top of that place where things have peaked. We may see some further reinforcement by Mr. Trump, and he's going to probably add to the inevitable downside to probably give it that momentum to the downside. So those three factors: hedge fund margin calls, the options market, the kind of leading indicator of the Nasdaq. There's one more thing that slips my mind. But we can see with all of those things coming together, the news as well, the news as well, is kind of all indicating that the momentum is coming to an end here, and then we should start to see that price decline. Now, the interesting thing was after I think I pointed to that gamma flip number 7,000 or thereabouts, at that level, at this level, we should see a massive acceleration to the downside. We should see things actually not start to fall. We should see them start to plummet. So we could kind of align it. We could say, okay, the news is likely to come out next few days. We're going to see maybe another all-time high at 7230. We have a major option expiry date. I think 30th of May is the next big one. And then after that, I think we're at the all-time high. I think everything is likely to be down from there. Oh, we have to wait for Nvidia to earn as well, to report earnings. So that's a bit of a spanner in the works to the positive side because we don't know how much of their positive earnings is going to be baked in. We have to understand um, whether or not uh, they've baked in some of the oil crisis that's around the corner. Let's just take a look at them. Nvidia, I think they report around the middle to the end of May. Well, they're coming off as well, to be honest. So yeah, they're starting to come off as well from yesterday. We're seeing that kind of weakness emerge with Nvidia as well. So Nvidia, if anyone's going to prop up the market, it's going to be Nvidia and whoever left to report in the chip, the semis. Uh, and that should give us some kind of direction there. Okay, so this week, I'm expecting some covering on the hedge funds from the hedge funds. That's going to drive prices up, likely to hit a ceiling of 7.230. We always have that overshoot. Don't forget the overshoot actually for all those stops being ripped out. People usually institutions have those stop losses in. So okay, maybe 7.240 stop losses get ripped out. We're still at that 7.230 call, and then boom, after that we start seeing sentiment decline. But also interestingly, by the way, and I'm going to finish on this, is that can you see this 50 moving average here? We are starting to see the price flirt with that, maybe come down, spike down once or twice, and then things come down. So the reason I'm so eager for things to come down is because I've had a negative sentiment from 650. It's been horrible to watch last month because this should not have happened. What you're seeing here, this should just not have happened. The only thing supporting this is seasonality. So I'm not, as far as I'm concerned, the price is still here and the market's wrong. I don't think the market should be where it is. So, I don't want to, as soon as it comes to that, we'll review and come out with another assessment on this. Okay. So please like, subscribe. The reason I say that is because I'm not motivated to do this YouTube channel. This is something I thought is a great way to make my notes. Some people need help out there. I refer them to the channel. It's kind of like getting it together, and I can voice out my thoughts, right? So it helps me a little bit, but if it's of any help to anyone else, then great. But I want that community to build up and ask questions and say, okay, what about this? What about that? Then I understand where the community is. I don't think any hedge fund analysts and experts are going to sit here watching this, but I'm sure those with a couple of years of experience, they want to go to the next level in the markets. They want to see what I've traded tens and tens of millions, by the way. I've traded a lot in this market over the last 25, 30 years. So I've got a very, very good feel for the American markets. I've made a lot of the mistakes. I can also guide you through what not to do. I could guide you through who the corrupt brokers are out there, how you're going to get scammed by the professionals, how that all works. But I just need to know you're directing the channel. So you tell me and I'll start giving you some insights and thoughts on that. Okay, so all that said, we're going to reconvene at some point this week.